Welcome to Capital Link's company presentation series.
Good day to everybody. I am Nicholas Bornolis of Capital Link, and I would like to welcome you to Capital Link's company presentation series. We are privileged to have with us today the senior management of United Maritime, Mr. Stamatis, Tsantanis, CEO, and Mr. Stavros, Gyftakis, CFO. Let me remind you briefly of the disclaimer that this presentation is meant for informational purposes only. It is not meant to be investment advice or advice of any kind, and obviously it is not meant to be a solicitation to transact in any securities. It's just for information purposes. In terms of logistics, we will start with a brief slide presentation, and then management is going to reply. We will have a live Q&A session, and please submit your questions. At the bottom of your screen, there's a Q&A button, and you can submit your questions anytime during the session, and Stamatis and Stavros will reply to them after their slide presentation. And in closing, this session will be available as an archive to be accessed upon demand later on. And with this, I will turn the floor over to Stamatis and Stavros, and thank you for being with us.
Thank you, Nicola. Another big congratulations for Capital Link for hosting this very informative presentation series for a number of quality shipping companies listed in the US exchanges. And it's a great honor to have United Maritime's inaugural presentation. I think the only time we have been live with our investors was the company's third quarter financials. And this is basically our first official presentation to our shareholders. So it's a great thing, and certainly the first one for 2023. So we look forward to presenting our company, and we will be very happy to answer questions from the audience after going through the slides. Having said that, I would like now Paul and Nicholas to open up the presentation so we can go to the slides. Thank you. All right. So this is the cover of the presentation. If we can go straight to the summary, please. Which is slide number 3, if I remember. Yeah, slide number 4, actually. All right, thank you. So United Maritime is a diversified international shipping company, and we have incorporated very recently. United has been a spin-off out of Synergy Maritime Holdings, and we went public in July of 2023. So we have been in existence literally about 7-8 months. But even though we have been alive and kicking for only a brief period of time, we have been very active, not only in expanding our fleet, but also in rewarding our shareholders. So right now, the fleet, after various purchases and sales that we have managed to achieve in a very prompt period of time, consists of 4 vessels, 1 LR2 tanker and 3 Capesize dry bulk carriers, and we have a combined cargo carrying capacity of 635,000 deadweight tons. Our plan is to continue to expand in diversified shipping sectors, so we are sector agnostic as long as it's a mainstream segment of shipping. So we will continue seeking opportunities to buy low and sell high. So this is the motto of the company, and to reward the shareholders as quickly as possible following the capitalization and the monetization of a certain investment. So we believe that we're a very unique play in the public shipping space right now. We are aiming, and we have achieved so far, very high shareholder returns, and we expect to continue generating high returns for our shareholders that will be distributed imminently post monetization of certain transactions. Next slide, please. Right, so this is the fleet list of the company. As I mentioned before, we own and operate a fleet of 3 Capesize vessels. All of them are chartered. They are built in Japan and South Korea, and 1 product LR2 tanker which is currently chartered to ADNOC for until the end of Q1 of 2023. Next slide, please. A few words about ourselves. I am Chairman and CEO of the company. Next to me is Mr. Gyftakis, Stavros Gyftakis. He is the CFO of the company. We both have long-standing experience in our different fields, shipping, capital markets, banking, and we have been with Synergy and now with United since the inception, especially of United, and in Synergy for a long period of time. We also have a high-quality board of directors consisting of independent members that add a lot of value in United, and they all come from diverse backgrounds from freight derivatives, from banking and investment banking and consulting. So we have a great board of directors altogether. Next slide, please. Well, the timeline of the company looks much longer than the actual existence of United. Usually see this kind of timelines when a company is in existence for like 10 or 20 years. But even though we have been alive and kicking, as I mentioned before, since July, we have been very active in obtaining a high-quality fleet, a tanker fleet, before the super surge that we have experienced in tankers. So not only we identified very quickly and promptly a quality fleet, which we agreed to acquire prior to the company going public. Then we did our initial and only public offering back in July that we raised about $26 million. That was, in our opinion, the best managed initial offering of a spin-off company from all the other shipping companies making spin-offs in 2022. And then we entered into a buyback program trying to reduce the share count of the company, which we managed to reduce by about 25%. We sold some of the ships and we have declared a special and paid, we have declared and paid a very big special dividend already. And now we are rebuilding the fleet, first with the acquisition of 2 Capesize vessels that are coming from Synergy Maritime and are expected to be delivered in 2023 in Q1. And we will continue to seek opportunities to expand the fleet going forward. So next slide, please. Right. As I mentioned before, we have unique access, and that was the purpose of founding and spinning off United in the first place. When we were at Synergy, and we're still at Synergy, we're being presented with numerous opportunities outside of the Capesize segment. And the tanker ships that we agreed to acquire took delivery and already sold some of them is a strong attestation of how well we have delivered this plan. We expect to continue using our vast network, high quality network of people bringing us this kind of opportunities. And we expect to capitalize as we are a very experienced management team that we can bring together and execute this kind of transactions very quickly and very efficiently. As I mentioned before, the plan for United Maritime is to continue buying ships at what we believe to be the bottom of the market or close to the bottom of the market, or at least identify a real value for our shareholders. And we're not going to hold these assets for an indefinite period of time. When we see a great opportunity to monetize a certain investment, we will sell the asset and we will try to immediately deliver the ships and the dividends and the returns of whatever process we do back to our shareholders very, very quickly. At the same time, we are a very experienced management team. We have great access to financing and financing capabilities, and we can lever up the current cash reserves of the company in order to make bigger deals instead of cherry picking 1 or 2 ships. Again, we are sector agnostic as long as it is in the mainstream shipping sector, and we will continue looking at opportunities in various shipping sectors to buy low and sell high. So next slide, please. As I mentioned before, we have had one of the best timed sell and purchase and sell processes of the listed companies out there, especially the spin-offs that we saw back in 2022. So we identified a fleet of 4 tankers even before the company went public back in July. We agreed to acquire these ships. We bought them for a combined about $80 million altogether. And in October, after only owning and operating the ships for a brief period of time, we were presented with sale opportunities at a humongous profit compared to where we bought the ships. And we decided, of course, to take that profit, at least for 3 out of the 4 ships. And so far, we have been extremely fortunate to have made a profit of $39 million altogether from the sale of these 3 ships. And that's a return of 38.5, whatever that is, combined. And that's a profit that represents approximately 153% of the company's market capitalization as of the recent closing price. So I cannot think of a company that has made this kind of a return for the shareholders. And not only that, if we can move to the next slide. Here is evident that we decided to start paying dividends immediately after the monetization of the first acquisition phase. So we were not happy with the way that the stock was trading after the initial public offering at $3.25 a share, which we did back in July. So we decided, after having agreed to buy the ship and having very strong cash reserves in the company, contrary to a number of spin-offs that have decided to massively dilute their shareholders, we did exactly the opposite. Instead of creating dilution, we decided to start buying back the shares. So we have managed to buy back the shares of about $6 million at an average price of about $1.8, $1.9. So we raised capital at $3.25, and we bought back 25% of the company at a fraction, about half of what we should money for. So it goes without saying that the accretion we have created for the shareholders is tremendous. At the same time, since we decided to monetize the investment on the tankers on 3 of the 4 ships, and the company's cash reserves are very strong pace, at a very strong level, we decided to immediately reward our shareholders by paying a special dividend of $1 per share. Again, I cannot think of other companies that not only have diluted to pay a dividend, those that have diluted their shareholders massively. So not only we did not dilute our shareholders, but we bought back the shares, and at the same time, we paid a special dividend of $1 per share, representing a massive return on each share very, very early into the game of the company. Right now, the cash reserves of United are about what, $3.5, $4, $4.5. Yes, the cash reserves, we're now trading at about $3 per share, and the cash reserves alone, excluding the NAV of the value of the fleet, stands at about $4.5. Just to show you how much undervalued we are still, how much cash reserves we have, and how much more we can reward our shareholders and expand the company. Moving to the next slide, please. That is more than evident in this slide. So we have bought back about $6 million of shares in 2 buyback plans that we did in Q3 and Q4, and we have acquired back 25% of the float of the company. And at the same time, we paid a special dividend of 33% yield. And that's a total dividend of $7.3 million. So we have returned back directly or indirectly to our shareholders about $13.3 million in 2022. And that's 53% of United Maritime's capitalization as of the recent thing. So again, I cannot think of any shipping company listed right now that have delivered this kind of returns to its shareholders, especially in such a brief period of time that we are in existence. So next slide, please. A few words about the market fundamentals. The company right now owns Capesize vessels, and we have 1 LR2 tanker. So I'm going to stick to the product tankers and mostly on the Capesizes. As I mentioned in the recent presentation of Synergy, I strongly believe that the demand and supply fundamentals for the Capesize market are at one of the historically best times. And the reason is because demand is expected to be quite strong following the reopening of China and hopefully the reduction of inflationary pressures that we experienced in 2022. So that's going to be reversed now in 2023. And we already see the first signs of demand improving as far as our key commodities that are iron ore and coal. So that alone from a demand point of view is expected to be extremely strong for the market. Now, what is actually going to help in the market a lot is the fleet development. We now stand at the lowest order book on the Capesize vessels of the last 20-25 years. And I cannot think of a better reason for a nice, prolonged and sustainable recovery in the market when the supply of new ships is at the disciplined levels as it is right now. And the reason why the market is at these low and disciplined levels is, first of all, from a financial perspective, the premium of a new building ship is almost at a double as compared to a 10-year-old vessel. So it doesn't really make any sense to build new ships. And at the same time, the new technological advancements coming up in 2030 pose a big uncertainty about what the vessel of tomorrow is going to look like. So I don't think that anyone in his right mind is going to start building a series of ships, not knowing what the fuel type is going to be in a few years' time, and possibly some of the ships becoming obsolete in 10 years instead of 25. So that regulatory discipline imposed on the market, as well as the strong demand fundamentals, we strongly believe that the market is going to have a nice and sustainable recovery and growth over the next few years. Moving on to the product tanker market, which is the next slide. Thank you. A few words about what we forecast. We have a very limited order book on the product tankers, and especially on the LR2s, we see very limited new entries coming into the market. At the same time, it appears that the product tanker market is going to be, especially on the larger ships, is going to be the play of tomorrow. And the reason is that we are seeing more and more refining capacity being delivered closer to the production areas. So we see one of the biggest barrel per day increases of refining capacity in 2023. We expect about 2.9 million barrels of products to be delivered from refineries, from new refineries and extensions in 2023. And that's on top of about 1.52 million barrels of new refining capacity that we saw in 2022. And that was one of the biggest combined growths in refining capacity that we have seen in history. So that being said, we expect the ton-mile effect of the product tankers to be increased substantially. And the disruptions that have caused into the market because of the war will continue for the foreseeable futures, surely for 2023 and maybe forward, because the sanctions and all these trade problems that we're seeing have become quite problematic for the trade. That being said, the ton-mile effect is expected to be translated much stronger for product tankers. Combined with the lower fleet growth, we certainly hope that the market is going to remain quite strong on the oil product trade as well. On that note, I would like to pass the floor to my colleague Stavros Gyftakis to go through briefly the financials of United Maritime, and I will come back to the end for some closing remarks. Thank you.
Thanks, Stamatis. Good morning also from my side, and thanks to Nicholas and the Capital Link team for hosting another presentation for one of our good companies. Now, in terms of financials, very quickly, what happened in the third quarter, even though this is not representative of the current picture of the company, because the sales of the ships and all the corporate development that Stamatis discussed before took place in the fourth quarter. So on the back of 244 operating days, because the tanker vessels were delivered to us through various dates in August and September, we managed a time charter equivalent, a daily time charter equivalent of close to 24,000 over daily operating expenses of 7,500, which are in line with the sector average, considering also the older age of the ships. Net revenue was close to 8 million, and we managed to have our first quarter of operations being profitable by 1 million. Of course, this is very marginal in comparison with the more than 35 million profit that we achieved in the fourth quarter, or estimated profit in the fourth quarter out of the sale of the ships. A couple of figures from the balance sheet. Cash and cash equivalents stood at 21 million, again, before the sale of the ships. The net book value of the ships was 98 million. Now here, I mean, this represents the net book value of 5 ships. We sold only 3 out of those for gross proceeds in excess of 100 million. This attests to how accretive the sales were. And again, the cash at the end of September were 21 million, or approximately $3 per share. And through the sales, and after having paid the special dividend, and after accounting for the acquisition of the Capes, we stand currently at $4.50 per share. Again, the sales and the corporate development scenes were hugely accretive on a cash per share basis, to say the least. Moving on to the next slide, a couple of words on our only loan facility provided by Entrust, which has been a partner of United and seen as a long-term partner. This is a fixed rate loan, which has proven to be a very good hedge against the rapid increase in interbank rates that we experienced in the second half of last year. Loan to value is moderate at below 50%. The facility amortizes through 3 million of quarterly installments, starting as of the second quarter of the year, and matures next year. And based on a very solid asset coverage, we don't foresee any issues in refinancing this. And in the next slide, please, Paul, a couple of words on our share and current trading activity. So our ticker is UC. Our stock price is around $3, which is close to the levels that we completed our first successful offering, and this after having paid $1 dividend per share. Our trading liquidity is around 440,000 shares, average of the last 3 months, and the market cap of the company is around 25 million. So the share is fairly liquid, but continues to be grossly undervalued. Imagine that only cash per share again is $4.50, and on top of that you have the equity value of the ships based on loan to value of 50%. This should be around $5 per share. So again, a great opportunity, liquid share, and hugely undervalued. With that, I will turn the presentation back to Stamatis for his closing remarks, and we're here for your questions.
Thank you, Stavros. That was a great run-through of the financials and the key financial figures. If I may provide some closing remarks before I answer some questions that we have received. We expect to continue looking into diversified opportunities. We are a diversified shipping company, and we expect to continue growing the company and at the same time reward the shareholders. We have a strong alignment between the management, the board of directors, and the rest of the shareholders, and we will continue providing this return to them. I cannot really say that we will continue doing $40 million deals every 6 months, but we will certainly use our network to try to identify quality vessels in order to acquire and expand the fleet. Now, most importantly, not only we intend to expand, but we want to have immediate rewarding of our shareholders, as we have demonstrated. So shareholder value in various forms. If that cannot be achieved by the share price, we will do it through dividends and special distributions. This is the key priority for us, and we will continue doing that as quickly as possible following the monetization of any transaction. Having said that, I would like to thank everyone for participating in the discussion today. and I will go through and answer some questions right now. Perfect. So the first question, apparently some people have not received the dividend, which we paid on the 11th of January. That has nothing to do with us. We have already paid the dividend to the transfer agent, and I understand that certain brokers have not distributed the dividend yet to the holders into the accounts. That's beyond our control. It's strictly between the transfer agent that has received and distributed the funds already. And we hope that this issue arising with a very limited number of shareholders, this issue is going to be resolved anytime soon. But again, it's beyond our control. From our end, we have paid the dividend, and then it's a matter of distribution between the transfer agent and the brokers into the individual accounts. I can assume here that since this is a massive dividend, like $1 per share, that may have caused some problems with certain accounts. But again, please resolve that directly with your brokers. It has nothing to do with the company. And happy to help if you can send us an email to help you in any way that we can. The next question is a very interesting question, asking us why we pay the dividend in the first place. And as I mentioned before, we want to continue paying dividends because we want to continue distributing profits to our shareholders as close to the monetization of investments as possible. Now, we already keep a very strong cash reserve in the company, like Stavros said before. We still have about $4.50 per share, excluding cash flow from the acquisitions, after the acquisition of the new ships and after the dividend that we have paid. So a balanced strategy of rewarding the shareholders and expanding the company is going to be created. The next dividend asks us again why we send dividends and do not reinvent the funds. As I mentioned before, we will continue having a balanced strategy, and we will continue paying dividends and expanding the fleet at the same time. Regarding buying more ships for Synergy, I do not see and expect buying any additional ships from Synergy anytime soon. We're now looking for opportunities in the open market, and I think that the next phase of acquisitions is going to be from the open market. There's another question that discusses about the threshold for discount to NAV for buybacks. The answer is not really. When we feel that the stock is getting into lower levels, we might as well start buybacks again. We have already bought back 25% of the float. We have a limited float of shares, so we don't want to reduce that to a point where it's going to be affecting the liquidity of the company. So it's a fine balance between maintaining trading liquidity and buying back shares. So that's always in the back of our minds. If it goes down further, then we might consider buybacks. But again, our priority now in respect of shareholder returns is through dividends and distributions. About the warrants that have been exercised, that's a great question. It's about 400,000 warrants, right? Exactly. Yes. It's not warrants that have been exercised. So not many warrants have been exercised for reasons that are inexplicable to us. We would have expected more and more warrants to be exercised. It didn't. So maybe in the future, if there's another stock run, we might see some warrants being exercised. But the stock went up to $4.50, and we didn't really see any more warrants being exercised. There's a nice question about India banning older ships from calling their ports. We believe that in the longer run, this is going to be affecting positively shipping a lot. There are many super old ships operating right now in the Indian waters. It's not something that is going to happen overnight, but we strongly believe, combined with the limited supply coming up in the next few years, that banning older ships from trading in India, which was more relaxed about age, that is going to be affecting positively the market a lot in all respects. Oh, about new buildings, we do not considering any new buildings ourselves, and I don't think that, as I mentioned before, anyone in his right mind would be considering new buildings today on the dry. On the tankers, maybe, but we don't consider new buildings at all. The next question discusses about expansion and diversification of the fleet that implies a forthcoming share capital increase. The answer is no. As I mentioned before, we do not expect to do any share capital increase. We have plenty of cash reserves right now and plenty of borrowing capacity. So this company may as well do $100 million deals very easily if we want to. But we want to be careful with the selection of assets. We will not expand for the sake of expansion. We want to do it very carefully and very disciplined so we can generate the returns that we have already demonstrated that we can generate. Right. The other question says why the third repurchase program is not being executed considering the huge NAV discount. Well, as I mentioned before, the priority is to pay a dividend, which we pay a dividend now. We want to see how the stock is going to settle in the next few weeks and months. We have our Q4 results coming up in February. So depending on how the stock is going to perform, we might as well reinitiate the third buyback program. We might not need not to. But again, the priority for us in respect of shareholder returns is mostly pay dividends and distribute cash instead of buying back shares at the moment. The other question, when can we expect new deals for ships? Is there a target for cash share that you believe is healthy? The answer is that it can be very promptly. We're actively in discussions with a number of sellers for acquisitions. Since this is not a straightforward thing like synergy, where we buy one cape, we sell one cape, and things like that, playing in various sectors of shipping has another level of difficulty in identifying the right quality of ships, not only in respect of value, but also in respect of condition. So we expect to be in a position to start announcing additional acquisitions in the next few weeks. The other question talks about whether we would look to sell the capes if prices go up. Well, the short question here is obviously yes. That's the purpose of buying the ships from Synergy. We want to be ready to sell if the opportunity comes across and monetize and distribute profits to our shareholders like we have done very successfully. The other question talks about whether we are actively looking to sell the remaining tanker. The answer is not right now. We're very happy with the time charter of $45,000 a day with ADNOC, with Abu Dhabi National Oil Company. At the end of the charter, we need to dry dock the ship. Depending on where the market is in all respects, we might as well charter it again or possibly sell it in the market if we receive an offer that we cannot refuse. I cannot tell, it's too soon right now. We might do it, we will decide in the next couple of months. So far, we're just enjoying the strong cash flow of that ship in the company at $45,500 a day, which is very, very strong. The other question is target number of ships. Well, you know, we do not really have a target number of ships, and you know, saying a name would be kind of vain. So we're not dreaming of making a fleet of 50 or 100 ships. What we are actually aiming now is to have a good ratio between the share ownership of the company and the number of vessels. So, you know, if, for example, we own 50 ships and we had a billion shares outstanding, that would be completely different. Right now, we have a strong discipline on the ships that we are deciding to acquire. But at the same time, we also have a strong discipline on the share count of the company and how that translates on a profits per share for each individual shareholder. So maintaining a disciplined number of shares and a disciplined number of ships that will translate in bigger profits per share is actually top priority for us. So I'm going to continue on that course. And contrary to other companies that have created humongous dilution for their shareholders, we have done exactly the opposite, and we take super care of our individual shareholders. The other question talks about whether we are at the bottom of the dry bulk market and a turnaround is imminent. The answer is yes, for a number of reasons I mentioned before. We are at the bottom. We are now right before the Chinese New Year, which is the slowest period of time in China. That, fortunately or not, it provides one of the biggest drivers for dry bulk market globally. We believe that in the next few weeks we will see market reopening aggressively, and it's reopening in two ways. First of all, they are out of holidays, and second, they're out of their houses after 3 years of partial lockdown. So that is going to help the industrial production a lot. Now, having said that, the supply of ships is going to make a difference, especially the EXI and the CII that even though it has come into place since the beginning of the year, it has not really, we have not really seen the effects of that. We expect to see the effects of that in the second half of 2023 and onwards. So it's a combination of the above factors that we strongly believe will lead into a much stronger market. The other question comes from an investor talking about intention to expand in sectors such as hydrogen, CO2, and all that. Well, the answer is no. This is going to be a mainstream company with a mainstream fleet. We do not intend to reinvent the wheel. We're not Google or we're not Biogen. We will stick to what we believe to be a mainstream standard size and type of ships. And so far, we have been extremely capable in generating huge returns, and we expect to continue doing that. The other question talks about, do we have a limited period of time where pricing is at its low for dry bulk? The answer is yes. And the reason is the past couple of years, we have seen 3 years, we have seen a lot of profits being generated in the container market and in the tanker market. So all this capital is expected to be put to work anytime soon. And I fully agree with you that we should be putting capital into work, and we are working very, very hard in identifying the right ships for you. And that's what we aim to do. On that note, hold on, we have another question. Again, a repeat about the dividend from the broker. The answer is that we do not know. If you can send us an individual email to the company, happy to help you. But that's between the broker and the individual accounts. We have absolutely no power over the brokers paying the dividend accounts. From our end, all dividend has already been distributed, so we have done everything that we can in order to pay the dividend. Right, and the final question says, if USEA has a vision of market cap size it hopes to achieve over time. The answer is no, as I mentioned before. For us, it's mostly a price per share and a profit per share exercise instead of becoming a trillion-dollar company or a multi-billion-dollar company. We want to have a boutique approach in providing the best possible returns on a per share basis for our shareholders, and that's why we expect to keep a tight and disciplined share count over a tight and disciplined vessel count. On that note, I don't see there are any other questions. And I would like to thank everyone and Nicholas and the Capital Link team for having us today. There is Nicholas again. Stavros and I are very grateful for helping us present the company to the investors first time in 2023, and hopefully first of many. So on that note, thanks very much, everyone. And thank you, Nicola, for having us today.
Stamatis and Stavros, I would like to thank you closing this presentation. And I have to say, I am delighted to see, frankly, the avalanche of questions that you have been getting. And I think this really validates the purpose of these presentations, that they give the opportunity to a broader audience to interact with management directly, submit their questions. And I think that shows the interest in the company. But above all, it shows the value of this interaction. So thank you very much for joining us. In closing, I would like also to remind everybody that this session will be available as an archive for replay upon demand later on. And again, thank you, Stamatis and Stavros, and to all of our participants.
Thanks, everyone. Have a great day. Thank you. Bye-bye.